Last week gold was mostly sideways. You can see this is new sideways range below 4250 but above $4,000 because everyone is waiting for new FOMC meeting rate decision. That's why there was no major action last week but a red line from upper part of the range. Plus 60% gain in gold this year. So that's why this FOMC extremely important. Because after FOMC meeting, we can expect gold weekly closing either outside the range or more red candlestick towards $4,000 level. Because between these two levels immediately on dip, retracement level will start and technical trader will start buying again. Plus you have a trend line near this area which is visible from weekly to H4 time frame. But you cannot ignore 60% gain in gold this year. This is historic and this is happening after 50 years. Last week there was one more Fed Powell interview that was non-FOMC event according to all mainstream news media. Fed Powell said nothing about monetary policy, but if you watch interview, they were talking everything like stagflation, like 50 years ago when gold was going up same to same like this year. That led in quote currency debasement. Even Powell said nothing. He was quiet all the time, but they were talking everything. So technically either closing come outside the range or more retracement inside a range. But you have clear static support and resistance. But all the people who are buying gold for next 12 months, let's say December 2026, all the big player, that's mean big banks, I think before buying or selling gold, they all must be watching historical gain in gold. Because if profit taking triggered either after FOMC meeting, Fed surprise hawkish FOMC this week, then profit taking can easily push gold inside the range and retest of this trend line highly likely. December FOMC meeting always important because Fed Powell will explain entire year 2025 when everyone was worried about inflation expectation, tariff and rate cut narrative, but nothing happened. There was no major inflation spike. When you have no inflation like 2008 crisis, they can run their ultra loose policy. Inflation is only enemy in their rate cut path. Because it is December FOMC meeting, they will predict entire year 2026. How much cut they will predict next year 2026. How much inflation they see next year 2026. Because this year there was 60% gain in gold, but as a inflation economic indicator, there was no major inflation spike. So why there is a big divergence between inflation indicator and gold price? Because there is no inflation this year and same thing continue next year 2026, then same like 2010, Fed can continue its ultra loose policy into 2026. And there's one more problem when next year 2026 start. Never forget their big beautiful bill, it will affect economy. Second, the government shutdown which end, everyone expecting rebound in first quarter. Plus all the cut they did this year 2025 starting August month when rate cut pricing begin. It's lag effect. So three type of force will hit the US economy in first quarter 2026. Under that condition, if Fed continue its rate cut, seem like this year inflation come or not. But if inflation expectation can push gold up 60% this year, then under same three condition, early next year, immediately after December FOMC meeting, these three things will be target. Economic rebound plus possibility of Trump new $2,000 stimulus check. If Fed continue its rate cut next year 2026 in this condition, then this year you saw 60% gain in gold. Who knows what gold will do next year under more inflation expectation. So if Fed blindly cut for next year 2026, for a more cut, Then we can see repeat like this 2010. Under that condition, small sideways range breakout, small sideways range breakout. That thing will continue. If inflation spike coming next year 2026, or if Fed do something to fight inflation expectation, then this is your election cycle 2026. If you see election politics, -4, 2022 you saw major policy tightening and gold collapse. Same 2018, major policy tightening and gold collapse. Same 2014, major policy tightening and gold collapse. Because during this time inflation or inflation expectation, they were very high and they run tight policy. Because high risk, either economy grow again or we get inflation spike. Because Fed Powell do something or not this week, or forecast more cut for next year 26 or not. But all of those things are waiting when next year 2026 start. That's when immediately after December FOMC peak, everyone will be pricing for economic rebound from these three factors. And we have to see this week FOMC, Fed Powell have fear of inflation or not this week. So after FOMC meeting, we will decide in future after next 3 months, which are seasonally very strong for gold, December, January and February. Gold will continue its bullish trend same like 2010, or policy tightening, gold downside coming next year. Under that condition, gold can continue its sideways range. Let's say clear breakout 4250 this week on dovish cut, but still if you see timing, then soon gold will reach toward its circle when it stay down, and it is happening for last 10 years. Even if you see monthly time frame, possible ABC wave counting or possible third impulsive wave, under both condition price is sideways. Now we have 3 monthly candlestick, all of them showing rejection near 200 and 61% projection near 4300. A possible fourth wave correction or next level correction after ABC, if it is coming, you can see last 3 times in election cycle, either correction continue or we need confirmation from FOMC this week, gold continue its upside bullish trend. But since bottom you have seen many times gold make horizontal sideways correction just to break out. So that correction continue till next year 2026 or breakout continue. Everything depends on Fed FOMC this week. How we see inflation in next year 2026. He is worried about inflation or blindly ignoring and running ultra loose policy. So monthly time frame you have strong resistance level 4300. Weekly time frame you have strong resistance 4250. Daily time frame you can see last week so many times price tried, but all the time it failed to break out 4250, which is your weekly resistance level. Same resistance level visible on daily time frame. So much time strong rejection, all the time failure last week. If price goes down more, then you will have this trend line, very strong dynamic support. This is last big support level. As long as price trading above this area, technically it is bullish. For bears, you need breakdown of this trend line. But our trend line, gold is bullish. Price breakout static resistance, then retest you buy, or downside correction continue, you buy on trend line retest. These are 2 possible buying setup, otherwise you have to wait and nothing. And seller who are selling on this resistance retest recently 3 times, they all will be targeting the retest of a trend line. But if trend line breakdown after FOMC meeting, because 60% gain this year plus hawkish Fed can trigger big profit taking. I don't think it will be easy to attract more buyer after 60% gain this year. For this thing to happen, you need very big dovish shift from Fed. Same like 2010 They have to blindly ignore inflation, and they have to forecast big cut for next year 2026. Maybe bigger cut size from 25 up to 50. Intraday H4 time frame for scalper. Then you can see these are big daily and weekly time frame resistance level. And we have two failure last week, like possible double top. If neckline breakdown, then it will be clear confirmation, but next target will be retest of this strong trend line. You can see fourth retest, and this will be fifth time. As long as price trading above this trend line, technically it is bullish.